listen up, because this is important. The world of Forex trading is not for the faint-hearted. It's a realm where fortunes are made and lost in the blink of an eye. The Forex market is a wild beast, constantly shifting and evolving. It's a place where only the sharpest minds and the most strategic thinkers can thrive. It's a $1 trillion ocean, and you need to know who the whales are. These whales are the ones who can create massive waves with just a flick of their tails. Institutional traders are the big players, the banks, hedge funds, and corporations. They have the resources and the influence to move markets in ways that individual traders can only dream of. They move massive amounts of money, and that movement creates the trends that can make you rich or wipe you out. Their decisions ripple through the market, affecting every trader, big or small. Ignore them at your own peril. Understanding their strategies and movements is crucial if you want to stay afloat in this vast ocean. These giants aren't just dipping their toes in the water, they're the tide itself, pulling the market in their direction. Their influence is so profound that it can create opportunities or disasters for everyone else. Understanding their moves is key to your success. Don't be intimidated, though. With the right knowledge and tools, you can navigate these waters effectively. You can use their size to your advantage by studying their patterns and anticipating their next moves. You can position yourself to ride the waves they create. By identifying their positions and intentions, you can ride their waves to profit. It's all about being observant and strategic, turning their massive movements into your own opportunities. And remember, even whales leave ripples, and those ripples can turn into tidal waves. Stay vigilant, stay informed, and you can harness the power of these market giants to your benefit. Before the trading week even starts, savvy traders are hard at work. They know that preparation is key. This isn't a casino, it's a chess match. You need a game plan. Start by looking at the commitment of traders. Report major events are important, but positions of big players are more important to start. Make the COT your friend. For those using support and resistance, you've jumped the gun. We need to know long versus short position first to determine trends, long before support or resistance becomes reliable. Now, this is why we start with COT data. The more prepared you are, the better your chances of success. Here's the secret sauce. Align yourself with the big dogs. When institutional traders are buying, you want to be buying too. When they're selling, well, you get the picture. Think of it like this. If you see a flock of birds all flying in the same direction, there's probably a reason. Maybe they're chasing a storm, or maybe they're heading towards a feast. Either way, you don't want to be flying in the opposite direction. But how do you know which way the institutional winds are blowing? That's where the commitment of traders COT report comes in. It's your secret weapon. We'll dive into that next. Now, before we get too far, I want to be clear. Most people who talk about institutional or bank trading proceed to show you information that they could never prove the institutions care about. They'll show you a high or low on a chart, label it buy side or sell side liquidity, and convince you the institutions pay attention to these areas, yet they'll never be able to prove it. What I'm about to share with you definitely is what these institutions are doing, with no debate, and you'll be able to prove this to yourself. But first, let's make a deal. If you watch this video to the end and see for yourself that this info is in fact the large institutional positions you need to subscribe and comment so I can continue to bring you better content. On to the show. First, we have broken institutional orders into free and paid options. I understand many of you are getting started with trading and don't want to or don't have the ability to pay for order by order option. So we will start with a free option. Now the concept might seem new or even a little complex. However, I'm going to show you a way to use ChatGPT to help in your decisions. This will speed up your process and take some of the work off your shoulders. First, a quick recap from our lessons on pairs. We know we need to look for strong versus weak currencies. If the pound is strengthening and the Canadian dollar is weakening, this would be the ideal for us to trade the GBP CAD pair. So how do we do this? To start, we use the commitment of traders report in a way you likely haven't seen. The COT report shows us the position of institutions. For this plan, we will only concern ourselves with the non-commercials. These are the large institutions that are regulated under the FTC and have to report their positions every Tuesday. This report comes out on Friday for us. And no, the delay will not be a problem for us, as the major positions are companies likely scaling in and out of positions over weeks, if not months. And you'll see this over the weeks of reviewing this data. I'll put a link to a company I have no association or affiliation with. However, they do a review of the non-commercial every week and have all the information we need. The company will be tagged in the description. Here's the short version with what you need to know. We know the future market has a centralized exchange, so we can trust their volumes more than the spot market. Compliantly, they have to report their positions every Tuesday. We want to look at total long positions, total short posturing, and net change. Let's say the COT data shows 100,000 longs and 50,000 for the non-commercials when looking at the greater British pound. This shows they would be long-term biased. If the net change is positive 10,000 contracts, that shows the short-term trend is also long, as they added 10,000 new contracts. This world make the British pound a strong currency. Our next job would be to look for a weak currency. Now let's say the Japanese yen had 50,000 long positions and 90,000 short positions. And last week, the net change was negative 2,000. This would be a weak currency. So we could look for long trades on the GBP JPY. And because you've watched all the videos in the series, you know, your trading hours are going to be in the London Open, 3 a.m. EST to 5 a.m. EST. Section 5, ChatGPT, your free co-pilot in the Forex market. Now you might be thinking, analyzing all this data sounds complicated. Well, that's where technology comes in. ChatGPT, a powerful language model, can be a huge help. It's like having a free research assistant. The best part is we can have ChatGPT do this for us. By sending chat the link in the description, you can ask chat to find the strongest and weakest currencies. Now, if you have a free version of ChatGPT, make sure you haven't used up your free GPT-4 or later. If you have, you might have to wait till the next day. However, that is one way to see the positions of the big players. Don't overthink or overcomplicate this part. This worked for me for years before I found additional ways to spot what the big players are doing. Section 6, order flow software. Seeing the market's DNA. If ChatGPT is your co-pilot, then order flow software is like having X-ray vision. It gives you a deeper level of market transparency, showing you the actual buy and sell orders driving price movement. Imagine seeing the market's DNA. That's what it is like using order flow. For this, you will need a futures account with live market data, and I will do more in-depth videos on this, but for now, let's show you what to look for. First, when you have live data with a company like CQG. You can use software like MotiveWave to track orders as they come in. One of my favorite tools MotiveWave offers is what they call their big trades, where we can specify large orders taking place. So let's say we are on 6B, the British pound future contract, and we set our orders to 50 contract minimums. A green or red circle will show up on the chart. These signify large orders. You think about how that could help your overall trading. Know exactly when big orders are coming in. Now, there is a lot we can do with MotiveWave and order flow. Too much to cover in this lesson. If this channel gets enough subscribers and views, I'll happily do a deep dive in true liquidity, resting orders, imbalances, and really help you see the markets as they transform. That will be my second series. For now, let's focus on Forex 100 level. Just as if you were at university getting your base education to build on, but for serious traders, order flow can be a game changer. Section 7. Discipline and patience, the trader's best friends. Having the right tools is important, but it's useless without the right mindset. The two most important qualities for any trader are discipline and patience. Discipline means sticking to your trading plan, even when things get tough. It's about controlling your emotions and not letting greed or fear cloud your judgment. Impatience means waiting for the right opportunities to present themselves. And don't chase every trade. Wait for setups that align with your analysis and risk tolerance. Remember, trading is a marathon, not a sprint. It's about making consistent profits over the long term. Section 8. Practical tips. Navigating the Forex waters. Here are some practical tips to help you navigate the Forex market effectively and efficiently. Start small. Don't risk more than you can afford to lose. It's important to begin with a manageable amount of money to minimize potential losses. Use stop loss orders. These are crucial for protecting your capital. A stop loss order can help you limit your losses and manage your risk. Don't chase losses. If a trade goes against you, don't keep throwing money at it. Accept the loss and move on to the next opportunity. Keep a trading journal, track your trades, and analyze your performance. This will help you identify patterns and improve your strategy over time. Never stop learning. The market is constantly evolving, so you need to stay ahead of the curve. Attend seminars, read books, and take online courses to keep your knowledge up to date. Remember, trading is a journey, not a destination. It's a continuous process of learning and adapting. There will be ups and downs, but by staying disciplined, patient, and informed, you can increase your chances of success. Patience and discipline are key to navigating the volatile waters of Forex trading. Section 9. Conclusion. Chart your own course to success. The Forex market can seem like a vast and intimidating ocean, filled with unpredictable waves and hidden currents. But by understanding the forces that drive it, you can learn to navigate its currents and chart your own course to success. Just like a skilled sailor reads the winds and tides, a successful trader reads the market signals. Remember, the key is to identify the institutional players, understand their motives, and recognize their patterns. And these big players often leave clues in the market, and by following these clues, you can position yourself advantageously. Align yourself with their flow, and you'll find that the market's movements become more predictable and less daunting. Use the tools available to you, whether it's the commitment of Traders Report, ChatGPT, or order flow software, to gain an edge in the market. These tools can provide valuable insights and help you make informed decisions. To gain an edge in the market, you must stay disciplined, stay patient, and never stop learning. The journey to success is a continuous process of growth and adaptation. The Forex market is always changing, presenting new challenges and opportunities every day. Staying updated with the latest news and trends is crucial. But the principles of successful trading remain the same. Consistency, strategy, and a clear understanding of the market dynamics are your best allies. Now go out there and make some money. Embrace the journey, trust in your skills, and remember that every successful trader started where you are now. Thank you for watching. If you enjoyed this video and found it helpful, please subscribe to our channel for more content like this. Don't forget to hit the notification bell to stay updated with our latest videos. Happy trading. Pause twos. Signing off. Pause twos.